every classic off-market operator is like, I'm drowning in almost like leads and stuff where I don't want to spend more money because I didn't know if we'd get to them.
What is going on, guys? Welcome to today's episode of the Collecting Keys Real Estate Investing Podcast. I am back today. You have been entertained by Dan and Dylan for the last 2 weeks. I was out. I was going to look for a good word for
entertained, but
you were.
We recorded podcasts.
The 2 episodes you guys did actually pretty well. So I think
Mike's like his ego's hit a little bit.
Yeah, like I might be the problem. But I've spent the past couple of weeks in Europe with my wife. We took a little trip over there. Went to a wedding in the UK, which is pretty good, and then to spend an extra week kind of visiting some friends that we've made in other parts of the world that happen to live over there. So it's a good time.
Cool.
But good to be back. And Dan, thanks for playing quadruple dad in our polyamorous business relationship, which everyone took off at the same time.
Never heard of it. That polyamorous. Yes, it is a polyamorous business situation.
It does have the drama that I would expect a polyamorous relationship to have sometimes. Yeah. There's a lot of like bitching, and then for some reason, when the other two partners are having a spat, it reflects on you as well, and it doesn't make any sense.
It doesn't.
So
it all hurts you.
It does. But all in all, it was a good couple weeks, though, business-wise. Been keeping busy. The lending business has been insane. I literally just pulled up our pipeline, and we have so many freaking loans that we're closing right now, or at least trying to figure out how to close. And, it's been really, really strong there. And then back at home buyer stuff, I mean, we've been getting some pretty strong lead flow. Dan, you've been out walking houses. You got a couple of contracts locked up on your own without any of the sales team in town. Just you and a VA just getting it done.
Yeah. Me and a Filipino. I think we could. I was actually looking at our kickoff this morning because usually there's more people on our kickoff, right? But everybody's out of town, whatever. And it was me, you, and our two VAs, Filipinos. Mm-hmm. I'm pretty sure we could run a pretty robust business with a couple of Filipinos and us.
Oh yeah, well, especially because
working part time. Well, we have really good ones, and we've had dozens before that weren't good, but we're like in a sweet spot, but also just like. You don't need a whole lot, I guess, was like the recognition. If you get the right folks trained up and the right people doing the things you could do it part-time. And
you get them to follow a process. I mean, I think the issue with having two more partners is because they came in with their own habits and they don't follow our general process, which when they're gone, everything just performs our general process, right?
It just reverts back to how we do it.
It does, because the staff that we have is ours, and they basically joined in. And so when they're here, they don't follow that. They kind of do their own thing, which I guess works for them. Yeah. But you realize how inefficient that is.
It's tough with staff because staff needs and wants a process.
They do.
Generally speaking, not everybody.
Well, it's easier with staff. It's tough when you have multiple owners that want to be owners.
Yeah, right? Exactly. Everybody wants to play daddy.
Yeah. So,
well, there's you guys on that end of the spectrum with 4 owners and a handful of staff members. There's me, or there's one owner, and Mike was just gone for 2 weeks in Europe and could really do his own thing while Dan had on the fort. Or I went out to Portland, Oregon this past week, and I came home and it's a shitstorm. And I've been playing working 14-hour days the past 4 days just to catch up. So.
Yeah. And to be fair, I hopped on more than half of our calls while I was gone, but you do always have to be somewhat engaged. I do think that when you're a small business, it's a myth that you can just step away, right? And do nothing like that. That's something that people use to sell you a course or a group or whatever, right?
Totally. If you're a one-man show, you can do that, I think, because you could just step away from your own lead flow. You're like, I don't need to close a deal this month because no one else is relying on you. But when you have people who rely on you, that's a little different.
It is, totally. And if you can not be down with not making money. I think if you're a real entrepreneur, the thought of stepping away and just losing all the opportunity is really brutal.
Totally.
Right. Yeah. But yeah, I mean, it's, there's always balances with it, but held down the fort really quick. And, there's lots of older stuff that got spun up too. I don't know if you saw this right before we got on this call, Dan, but Jesse locked up a deal that's 2.5 years old from Minnesota.
I saw that. And then she slacked me and she's like, that house we were looking at on Government Way today. She's like, well, the guy said it'll take 200. Do you want to go look at it? I'm like, fuck.
Oh, is that where you went? This?
No, that's not the one I was looking at just this afternoon, but I was just like, God damn it. Okay. She's, that goes back to just having, so I guess for the audience too, to hear the process we've been following recently, which we've done similar in the past, but recently it's leads come in. our lead manager takes them in. She takes the crap, gets rid of it. She understands what's good, what's bad. And then she's looking at it. She'll send it to me. Like, what do you think? I'll give her a quick range offer. She gives that range like, hey, my boss said, we'd probably be in this ballpark. What do you think? Do you think you would be somewhere in there? Oh, you will? Okay, cool. I'm going to schedule an appointment. Then she just books it on my calendar to go look at a house. Mm-hmm. And so that's how we've been running it for, at least just for me, for the last couple weeks, just because I'm busy and it's hard to just do all of that stuff all at once. But it's been nice. Maybe we're going to miss stuff, but I haven't seen anything slip through the cracks, because you're really setting the expectation. It's not like we're giving them a super tight range. It's like if the house ARVs, 300, it's like, hey, based on condition, we'll probably be at like 175 to 210. Would you be interested in that? Realistically, almost all the time we're at 175, but
yep,
it at least opens the door.
Getting the foot in the door, yeah,
right. But if you're at a point where they're like, no, I want 290 for my $300,000 house that needs 60 grand worth of work, going on an appointment, in my opinion, is not necessarily going to change that. Yeah. Like, they need to change their mind on their house first.
Yeah.
To open up that conversation.
I agree with that. Now, do you, one of my leading questions, and this is, my LM doesn't really ask this, but the acquisitions guy does, is, what do you want for the property? What your price expectation for property? I try to get them to say a number first, typically.
Yeah. Yeah. Oh, absolutely. If you can, for sure.
Yeah, you can. But if they don't, then you just give them a range,
yes,
right? If they're like, say, what do you want to offer me?
Well, a lot of these folks are giving us like, I want 260. And then like, we have one exactly like this. This guy that I was just talking about in the CRM, he came in, he's like, I want $250,000 for this house. And then Jesse's like, it sounds like he's ill and dying. Like, he doesn't sound good. So I'm like, well, he's motivated. And he's like, I don't want anything to do with this house, lives out of state, all that stuff. But he came in with a hard, I want 250. And she, I think, said we'd be at 180 to 200. And he's like, okay.
That sounds good. Yeah.
And like, somebody that's willing to come off of their price that quickly, there's something that you just automatically know, okay, we can have a conversation. They're at least willing to listen.
Well, there's so many BS people too that they probably talk to. They think you're another fly by night. They say 250 and they never hear from you again. But if you can say, hey, we're still interested, but this is the range we'll be at, they're like, oh shit, these people are serious. So yeah, I'll hear you out.
Yeah.
And the thing that's so powerful about running your process this way is it allows you to be a lot more efficient with your time. You're spending a lot less time walking out and, walking properties aren't worth it. Cause like what most people will do is, so they'll say it's 250, the house could be worth 285 fixed up to 300 fixed up, whatever. So it's a discount. So they go, okay, well, let me come and look at it. And you already know that 250 doesn't work, but you're going to go and get in front of them and do this bullshit. And you're going to let them down anyway. You might as well do it before you go waste time and walk the property. Right. Yeah. Because if they're not going to agree to any less than 250 already, don't even waste your time. Right. And so by setting an expectation before you go and look at it, it allows you to not have to be driving around on stupid appointments, spending an hour talking to the seller, just to not get a deal anyway. And it also, if you want, once you get good at this, you can launch new markets, right? You can have like a lot more flexibility with like where your team's located and everything else. Totally. This is what we always sort of preach and scale with folks that are in some of these like rural areas, especially, that are like, well, that market's an hour away. Like, I can't be driving out there all the time. It's like, well, then don't, unless it really makes sense.
Totally.
Honestly, It's that fucking simple, And if you're like, well, I don't even know if I can do that range that I said, because I haven't seen it yet. So I just haven't sent you photos. Mm-hmm. If they can't send you photos, then send somebody else out there and pay them $200. Like, you'll figure it out. But there's always this weird thing. I think it's because real estate guys, I don't know, they tend to be kind of tangible by nature. They always want to like walk the house and like get in front of people and feel it and like get the layout. Like I hear that all the time from newer people. Like, I just like to like kind of get the feeling of the house. I'm like, why? It doesn't matter at all.
Yeah. Dylan can speak to this fact. You do enough like renovations or go in enough houses, you're like, I don't give a shit. Get white inside and then gray carpet and we'll sell it. You're like, like the new people always come in there like, I just want to know that it's got really good flow and this, that, and the other. And you're like, I don't care. I just want to do what it takes to get the number that I put on the spreadsheet.
It's even worse with newbies because they don't know what the fuck they're looking at anyway. Right? They've never done a project. And so like, they're going to walk around and be like, oh yeah. Like that's always super fun.
That electrical looks good.
Yeah. When you're doing dispo and a bunch of newbies walk in and they kind of like walk in and like, oh, okay. Yeah.
When I first started, I didn't know. I mean, I'm not a handyman by any means, but like I didn't know the difference between plaster and drywall. I could see electric panel, be like, that's electric. Like
There's an outlet over
no
there.
fucking idea what I was looking at. So
Yeah.
Oh, yeah, that's great.
So it's like,
And look at you now, Dylan.
Yeah, you learn a lot by just fucking doing it.
Yeah,
So.
yeah, totally.
For sure. But but the thing is with you, Dylan, so you were in Oregon for like a weekend. You have an AM and a VA and an assistant, so why the fuck did it fall so far behind?
Yeah, so I mean, I think most of it is related to the fact that we have 7 rehabs going at one time right now.
Oh shit!
And I'm GCing most of
and you
those
don't.
rehabs.
Yeah, so you're not a project manager. Yeah, okay. So you're missing a seat, like needs to be filled. In that.
Yeah, but Dan and I actually talked about this a little bit while you're gone. I don't want to do this many rehabs at one time. I just kind of took them because the opportunity presented themselves.
Mm-hmm.
Right. Gotcha. I didn't want to turn away deals, revenue, properties. And so I'm just kind of like sucking it up and getting through this.
Yeah. Okay. Well, that makes sense. You're in like a specific one-off challenging situation and then chose to go to Portland for some reason.
I was there for a wedding. Thank you.
Okay. Oh, that's right. I think we talked about
He did offer to come visit me. He's like, how far is that from Spokane? I was like, too far.
It's pretty far.
Really far. It's too far.
It's like an hour flight.
Yeah.
Yeah, I didn't know. I was like, this is the West. I was like, they're on the West Coast.
Everything is very spread out on the West Coast. So yeah, we're far away.
Yeah.
But one of the things, I guess, while we're talking about like team sizes and like what it takes to run, I don't know, a business that does 4 or 5 plus deals a month. I had this old, basically like a break-even analysis of my business. This is everything from like RA Simply, PropStream, all the tech platforms, being registered with the Better Business Bureau, my PO box, even some economic subscriptions. Do you think what that is every month, like the overhead cost is?
For like all that?
Yeah, for basically to run the entire business without any direct mail spend.
Oh, I mean, like, so with those staff, I mean,
without direct mail spend,
10 grand easy, if not more.
What? No, I've less.
No, so this includes my salary. If you could take that out, it'd be a lot different.
Yeah. So he pays himself 25 grand a month.
No, I don't. 35. I pay myself $6,500 a month.
The baddie from Cincinnati is one of the richest dudes I know. So you pay yourself well.
It's getting up there.
All right, so we're just gonna move on past that. But anyway, the total is about 13 grand a month.
Yeah, that's what you pay to run your business, not including.
So that's without direct mail spend, and that's
okay.
paying me $6,250 a month. My AM $2,000 a month, and then my point being is it's about 13 grand a month, and then call that 18 to 20 with direct mail spend. But 90% of that is just staff. Me, my AM, my assistant, my VA, acquisitions guy.
Which actually speaks to honestly how low overhead this business truly is outside of marketing, because typically your labor is going to be like 60% of your expenses, maybe 50. Where here it's a lot higher in this business towards that, because there's just not a ton. You don't need a ton. You don't have to have an office space. You don't have to have a bunch of other crap to run the business. You need a few systems, right? And then your marketing, which is an incremental spend, that's really coming out of your gross proceeds anyway. So it's not considered an expense, right?
Right. Yeah.
So like it's heavy in that in labor and marketing.
But I just sent out another $7,500 mail piece. So like it's I guess my point being is like, for the audience, if you're doing 1 to 2 deals a month and you're wondering why I can't do like 3 or 4 or 5, it's maybe you're not spending enough money.
Yeah, that's 100% usually. If you figured out how to start doing 1 to 2 deals a month consistently, like that's your consistent number. Like I can do 1, I can do 2. Some months I do none. Some months I do 3. Like you can do 5 to 6 deals by just spending more money.
Absolutely. Like even just you, right? Maybe like one team member.
Yeah.
You know, you bring on a lead manager when you get to the phase of you have like so much backlog that you can't keep up with it anymore. Right.
100%.
But I mean, and what do you think that's threshold 5 or 6? I mean, that makes sense, right? For like, if you think about if you have a singular AM, like a good AM, if they're having to go on site, I would say like 8 to 10 a month. Right.
I would love to get. I mean, we're doing 5 to 6 a month now, and that's about my team. Me, a VA, or me, an LM, an AM, my assistant.
You're probably not spending enough money, honestly.
It might not be, but I've fit to the point too where every classic off-market operator is like, I'm drowning in almost like leads and stuff where I don't want to spend more money because I didn't know if we'd get to them. I mean, I sucked it up and did it anyway, but like it's the same shit.
Well, and like with you, Dylan, too, because you even talked about it earlier in the podcast, like you're pretty heavy on flips right now, right? And so the project management, so you're tying up money and you're tying up time with those because there's project management associated with that. So then it leads you to believe, which this is the next step for a lot of people, is like, well, do I hire a project manager?
Yeah.
Like, because then I could do what I do best, maybe, or to just do less flips, maybe. But like we found even in our CRM, looking at our stuff, like we've made a good chunk of our income this year by doing flipping or novations or wholesales. Like where Mike and I are usually heavy wholesale.
Yeah. Well, and also too, with what you're saying there, Dylan, so you're drowning in leads. As you increase marketing spend, the efficiency of your marketing drops, right? Like
I think that's what kills me. Like mentally.
Yeah, I mean that's kind of part of the game, though, right? Is you will get more leads that come in, less of them will be qualified because you're starting to get into less qualified lists, right? You're starting to hit like people in more rural areas, less out of like the target areas, unless you're in like a massive market. But even then, like eventually you will start to have loss that occurs just because your marketing list is less motivated, right?
So return on ad spend goes down.
Yeah. Yeah. So your return on ad spend might stay the same. Your cost per deal will go up, even if your cost per lead stays the same, right? Because you'll still get the same number of people that call you, tell you to fuck off, right? There will be just like less motivated people that call you when you're starting to get into exclusively just the absentee owner list,
Totally.
But so I think that's kind of the issue. And like what we are talking about at the beginning of the show, where you get used to creating these ranges to pre-qualify stuff a little bit earlier, that becomes more important because there's now, as more leads come in that are less motivated, there's more opportunity to waste time. And what a lot of people do is they're inclined to bring on more staff, which adds on more fixed overhead, which affects your business. So, it's one of those things you kind of need to break it to be able to fix it and figure it out. But I mean, drowning in leads, I think if you get to that phase, the next step is to figure out how many of those leads are actually quality, and what does that actual cost per deal look like? And if you're comfortable with that cost per deal, just push it until you're not anymore.
I think that's all valuable feedback too. And if I'm just sitting here, like my mind's always racing. It's like, okay, I got this to do, this to do next, this to do next, this to do next. And it's never, I should go back and see if my leads are qualified. Right. Yeah. So it's just like making it a priority when it's important, but it doesn't seem like the most important thing to do at the time.
Yeah. But I mean, that's the hamster wheel, right, of entrepreneurship, and why it never seems to stop, because you have to make that time. That's a big reason that like Alex Ramose's stuff is talking about how until you're up to a certain point, you kind of just have to work 14 hours a day because you spend 10 hours operating the business. You spend 4 hours doing all the shit to make your business operate better. Mm-hmm. You can't really afford to do both at the same time.
It's taking the 2 steps or 1 step back to take 2 steps forward, entire concept.
Yeah.
But I mean, he stole your guys' slogan the other day. Did you see that?
I'm super annoyed by that. He must be a listener. How else would he get that tagline?
Yeah. I mean, we stole it from Brandon Turner, which I found out after the fact when we said that on the show like years ago. And then one of our scale members sent me a YouTube video from Brandon Turner that was literally titled "Massive Income Before Passive Income." Oh, well.
Now you didn't have to disclose that, Mike. Now the whole world.
Yeah, but you know what? Here's the thing: nobody knows Brandon Turner as the massive income guy. They know him as the passive income guy.
Exactly.
Knows him as the real estate guy, the bigger pockets guy,
the guy with the beard.
And to be fair, Brandon doesn't know shit about making massive income unless it's like being an influencer, right? Like he's not out there grinding, walking crack houses, doing what we do. It's a little different. Yeah. He put in his time. He paid the piper with the thousands and thousands of hours building bigger pockets, and so he makes money that way now. It's like it's different than the grindy massive income that we're kind of talking about, because like realistically the people that we're pitching to with that, they cannot do what Brandon Turner did. Very few people can do what he did, no matter how
we can't do what he did.
He good at now for sure. If you look at how much more, that's actually a really interesting like conversation if you think about it, is with how much more real estate content is out there. Brandon Turner, if he were to start even like 3 or 4 years ago, would not be successful.
Oh, I don't know about not being successful. He would not be successful at the scale that he is now.
Correct. Yeah. So I think he's going to be a very successful person. I think he's a very smart guy. He would not be who he is, like with the level of following he has in the audience.
I feel that way about a lot of real estate investors I know, even locally, who have 50 to 100 units. And I talk to him, I'm like, you're dumb. But like they just bought at the right time.
Mm-hmm.
Yeah, for sure.
Yeah,
that's a lot of people.
And if you be like, oh yeah, I purposely bought, when I knew prices were, I knew printing trillions of dollars was going to happen. I knew inflation was going to be low. Like none of them knew this. They just invested in their backyard at a time that made sense.
Yeah, they just made shit work.
And same with if you look at all the influencers, so many influencers that are big, it's because they've been doing it for a long time and they're very charismatic and they just happen to have like a niche that became popular. This comes up pretty often in GoBundance. People are like, well, what's the next big thing going to be? I'm like, well, by the time you have an inkling of what that is, it's going to be too late, right? Like realistically, you need to kind of already be doing the thing and just hope that it gets popular.
And everyone's jumping on AI stuff. I can't get behind it until someone else does it.
I mean, the AI is like the kind of obvious one, right? I'm talking about like niche within the real estate space, like if you'd asked me 5 years ago if fucking boutique hotels were going to be the popular thing, I would have thought you were stupid. I'm like, why? Doesn't make any sense. But sure enough, there was people that were niche into that 5 years ago that did very, very well. And now their business must not be going that great because they're the boutique hotel gurus. Right.
Yeah.
That's
biggest one in hindsight to me is obviously the Airbnb. I know we've harped that on the show, but like even the people who do like the arbitrage shit, like I don't see that at all anymore in any of my social medias. And that was big for a while.
Yeah.
It was terrible. And that was, I think probably at some point in time when the Bigger Pockets listenership turned over, when they hired that dude that was like, I'm all in on Airbnb and that's all I do. And then combined that with David Green, I was like, oof, I don't think that's a good show.
Yeah. So, but it's like everything else. It just starts to get oversaturated. But when everyone starts talking about something, is probably the time that it's too late for it. Like right now, buying a small business. Literally, I had a guy respond to a little marketing email that I sent out for our lending company, and his response was, it's funny, he might listen to this because I sent a link to the show, so I'll be kind. I was kind in the email. He said, are you familiar with the Morby method? And and will you fund a deal that has this structure? And I responded back to him and I was like, no, and nobody else will either. And just so you know, I pretty much speak out against everything that Pace Morby does. Like sub 2 in itself isn't the problem. It's mostly about how he teaches it, and he makes it sound way less complex than it is. And it talks about how you can do it with no cash and all those other things. And I was like, I would highly recommend that you don't do that. He responded back and he's like, okay, well, I'm a veteran, and I'm I don't have a lot of money. I'm trying to figure out how to get into this. And I was like, where I've seen veterans have the most success is by using the 0% down VA loan to like start house hacking. To just kind of like get that initial investment going at send over David Perret, whatever. And then his founder comes back to me. He's like, well, I'm looking at buying, I think I'm going to pivot and look at buying small businesses. Do you that kind of financing? And I was like, no.
Sorry, dude.
I was like, over 3 emails, he completely changed his tone. He's like, I'm not going to do real estate more. I'm going to be a small business guy. I'm like,
those are ones that they just need to figure it out on by themselves. And they will eventually.
I know. Yeah. So yeah, it's, again, that's a perfect example though, is now everyone's getting into that. It's too late, right? Like there's so many different
I guess you just gotta
like dumb money has pursued things that just don't make sense.
For me, it's just like you just got to get to the point where you basically like fuck what everybody else is doing and figure out what works for you and what your like goals are with long-term investing, whether it's to make massive income, is it to build a rental portfolio, is it to grow your net worth? Because real estate can do all of those things. It just depends on what vehicle you choose to do it with, right? Yeah, wholesaling and flipping is the massive. Buy some more rentals, not even for the cash flow to live off of, but if you can basically burr into a place that's worth, call it $400,000, and let's say you're all in it for 10 to 20. Okay, well, you just bought $100,000 worth of equity for 10 to 20 grand. You an 80K spread. Do that a couple of times a year, and you're going to be in a much better financial situation 5 to 10 years from now.
Totally,
100%.
Well, and one of the sort of like themes with that you see preached a lot with, I would say, more experienced influencers around business. Hermosi says this a lot. I've heard other people say this too. Is like sticking with the same thing and like being patient. Right. And everyone's like, why are you in a rush? Like, why are you trying to do this? And that's a very easy thing to say, like when you're already rich, right? Because you don't have to be in a rush. You you can do whatever you want. You could stop working tomorrow and be good for the rest of your life. Those people that generally say that. But, even though I'm not quite in that position, right? Like I definitely still need to make money. Now having been self-employed for 7 years, I can very confidently say that I understand that and I fully agree with that, right? As if you are able to look at things without needing to be rushed, it's so much easier to make like actually smart decisions, right? And to be okay with like things going a little bit sideways, or want to try and get better like 1% every day instead of feeling like you need to be doing things 100x like this year, right? Which
it's
isn't
tough
realistic.
because the same conversations always go hand in hand with like you can't what is it, you can't hit a target, you can't hit you miss a shot every shot you don't make.
You really fucking butchered
that. Are you having a stroke?
I'm having a stroke. Oh my god.
Can you say that again?
Let's rewind this. So the same people in the same conversations are like, you got to set big goals, because even if you miss a big goal, you still hit lower than the target.
What the fuck?
I wanted to throw a target in there. You know what I mean? But like everybody's always in the entrepreneur world, like talking about setting big goals, lofty goals, right? Yeah. And they're always like, oh, you can do, more in, 5 years or a year than you can in 10 years.
You can do more than a decade than you can like do in 1 year.
I know.
Like the Bill Gates quote.
Well, or people say they say that you overestimate what you can do in 1 year and you underestimate what you can do in 10.
That's what I was trying to say the whole fucking time. So, but like when you're in that 1 year window, it feels kind of rushed because you have this big goal that you also kind of need to set. And so you're like rushing towards that big goal, and you had no fucking chance of ever hitting that goal because you overestimated what you could do.
And it's also it's hard, right? And people underestimate how hard it is. That's been one of my big pieces of guidance I give for like younger people who want to be in entrepreneurship. Is people always ask like, oh, what's something that or like a piece of advice? I will always say that things will take significantly longer and be significantly harder than you're expecting them to be.
That's right? Exactly it. That's
especially
put it.
In the beginning, and especially for a new one who wants to buy. Let's say you're young 20 and you want to buy rentals and you're trying to burr a deal, but you don't have any money. You need almost 100% burr deal. So which means you get a deeper discount, because if I get that same deal and I'm okay with leaving 10 to 20K in the deal, I can pay more for it. So you're competing against those people all day long. So it's tougher in the beginning than it is in any time.
You have to take more risk in the beginning too. That's just the unfortunate truth.
Yeah, for sure. And that's such a valid point. I would say now more than ever, because over the last 5 years, those of us that have been playing the game for a while, which that population has really gotten big. If you look at like 5-6 years ago, we are willing to do that. We still have businesses. We are playing the long game now. And the newbies that come in and try to do it like half-assed or part-time, they're always going to lose unless they get lucky. Right. So you either got to be willing to just grind until you get lucky, or you got to be willing to, figure it out and, really, really expect to take a lot longer than it would have even a couple of years ago.
And do it and keep doing it once it gets boring. That's been my thing lately. Like this isn't exciting really anymore.
Yeah.
You just got to keep doing it.
Yeah, not at all. And people will ask all the time, because like with scale and different things we do, I'll tell people exactly how we run our business, even people locally here. I'll literally tell them all of like our marketing campaigns, everything. And people that I would say are like quasi successful, they're always like, why would you give away all of your secrets? I was like, because I know that if they do the same thing, we will be better and we will beat them.
Yeah.
And I don't care. And if they do happen to beat me on a deal, then here's the great thing is because I help them figure that out, there's a very strong chance they're going to come to us and say like, hey, I don't know what the next phase is. Do you want to help us with this? And I will say yes. And then we will make money on that regardless.
Yep. So, and you tell it to 100 people, only one of them is actually going to do everything that you said anyway.
They don't do anything, so, but yeah, it's a, small business. It's kind of just the way it is. And as the economy and stuff's gotten weird, it's been fascinating to kind of see how that's all sort of started to shake out too, because, there's starting to be fewer and fewer small businesses every day, but also, I don't know, I would say like the general job market and things like that, like people are getting more and more fed up with just everything else, and affordability is becoming more and more of an issue. So who knows what the next little bit's going
Dan, we were right. Last week you asked if the Fed was what they were going to do that day, and we both said they were going to not do anything pretty much. Yeah. And that was right.
That's what they did. Well, I am known to be able to forecast the future. So if you guys ever want anything,
you can't speak.
I definitely can't speak. It's because I'm just so good at forecasting the future. It just messes up my mouth.
It's your autism, Dan. It's okay.
I have some of those tisms.
You do. You have
I
one too many
was
tisms.
I was checking the market to be like, haha, but you know what? The stock market keeps going up for some
So it
reason.
closed at all-time highs today, which is
I'm like,
kind of crazy.
Nobody knows why. It's like you can't sell a freaking house. Things are uncertain. Just things are weird. You're like, but guess what? Baby boomers 401k went up.
Yeah. I mean, well, it's transferring of assets, right? Like you have people that are having capital events, people that are selling houses, people doing different things. Where are they going to put it? They put it somewhere.
Yeah.
So-
I think right now it's just kind of swings back, right? Let's go. People are investing in the stock market a lot more recently because they're like, oh, it's an opportunity.
This will be a topic for another day, but there's a hedge fund manager out there. His name's Mike Green with Simplify Asset Management. And he basically has this theory that passive income flows. So basically like the baby boomers and their 401ks and how there's no theory, rhyme or reason. They just pick the highest market cap stocks because that's what their 401k and their vehicle is designed to do. That all of the appreciation really for the past 10 years has just come from these passive income, non-discretionary income flows. That's why the bag 7 keeps getting wider and wider from the rest of the 493 stocks in S&P 500.
You think
but
that's why their value is going up?
Yeah,
it's interesting because they are
That's
like
actually
99% of the stock market growth is the Magnificent Seven. Like almost all of like that stock growth.
Well, it's a feedback
is
loop.
better.
The bigger it gets, the more of the allocation that it gets.
Right. Exactly.
See, and this is why the whole system's so fucking dumb because it's literally based on nothing, you know. And over the past number of years, when trading stocks like that has become so much simpler, it's like lost all actual value, right?
Yeah, you got a bunch
Honestly,
of people
like,
out there just dumping
The
money
Warren
in
Buffett
stuff.
style investing, of value investing, doing discount cash flow models, finding the intrinsic value. There's like a handful of people who do that in the world, and they've gotten crushed the past 10 years from people who all they do is like, hey, this went up yesterday, so it might go up today. Like that's basically the thought
they
process.
just swing trade it, especially when you can go on like Robinhood and trade like for free, right? And like you go and you sign up and they just like give you margin to like trade on.
Yeah.
Right. So you have all these kids that are just like throwing money in like whatever is moving for the day and they'll hold on to it for 2 days and they'll sell it, you know, and do
Well, it's bad.
shit.
There was like a 20-year-old kid who basically was trying to trade leveraged options on Robinhood, and his account showed, like, even though he only had like $5,000, showed a negative $50,000 balance. That's not how it works. That's just what the UI showed him, but because that's where his contract showed, he killed himself.
Oh shit.
And then like the contract would have expired worthless. He would have lost like his $5,000, but he didn't know that.
Like he thought he was like out 50K.
He thought he was out $50,000.
Interesting.
Oh my God.
So I think that like that happened almost a year or so ago, but you guys jogged my memory. I don't know if that turned into like a lawsuit or not, but it's like you need, my point being is like educate yourself before you play with these leverage products.
Yeah. I don't know. It's a weird thing. I do think that will be the challenge that society faces in the next 10 to 20 years will be the wealth gap because of that.
Just about how rich guys like us get.
Well, yeah, I mean, honestly, right? Because even like we were saying before, Dylan, where it's like somebody comes in and if you need a full burr to be able to keep buying, but you're in a position where you don't need that exists across everything.
Yeah.
Right.
Yeah. The people that have the assets are able to do different things.
Yeah, for sure.
Invest differently. And then to your point about the Mag 7, then they get bigger as it's just feedback loop right back to itself. You get bigger, invest more, get bigger, invest more, get bigger. And it just goes on.
Yeah. You know, there's really no way to get out of that without some luck or like a large
luxury or
you had a meme
wealth
stock
tax.
that goes
get a
up
wealth
20x.
tax.
No, let's not talk about that. But there is one thing we should bring up that the Fed announced yesterday. And it's basically called loosening the SLR restrictions, which is the supplementary leverage ratio. The easiest and like cleanest way I can explain this, like if you are a JP Morgan, one of the big banks in the world, and you have 50 billion of assets on your balance sheet, you are required to hold, let's call it 10 billion in collateral against what you are lending out. So, and they have to hold those in safe things. So call that treasuries, bonds, mortgage-backed securities. Well, they're changing the leverage ratios where instead of holding 10 billion, you only need to hold 5 billion. And that 5 billion that is now freed up, you can use for whatever you desire as the bank, with the hopes that they use it for more lending purposes, free up some credit. The consumer can go out and spend more. Mm-hmm. So this is not the first time this happened. This happened after 2008, the bank crisis and COVID. And when Silicon Valley Bank all went up, they kind of did this too, and they eventually bring it back. But the whole point is loosening monetary conditions to hopefully increase spending.
So will this make debt any cheaper? Because now there's more availability in debt that banks can provide. Will they be willing to drop their?
I guess that would go back to the demand response to that. So I guess I would assume so, but it depends on the appetite for this new quote unquote collateral or debt that can be issued.
Is it? Yeah, that would be the question, because if it's issued at the same price, it feels like no. Maybe banks will say yes to a few more borrowers. I guess maybe banks naturally loosen up other things like credit score or background requirements.
This is more in line with Congress, big banks. It's not really like you or I having deposits at one of these banks, because that's going to be such a small percentage of the overall balance. So this is more like when the Congress issues its debt, and that debt needs to go somewhere, and the banks basically trade it amongst each other.
Okay, so then they can buy more debt from the government. Is that what you're saying?
Yeah, pretty much.
So then the government can have a place to get money from, and maybe then in turn rates go lower.
I mean, that the whole reason for doing this, and it actually voted 5-2, which I don't know why there's 7 votes. I thought there's more than that, but there's 5 people for, 2 people against, and they were basically saying like we need to loosen monetary conditions, but they want to do that without directly doing that with the Fed's funds rate. Right. And this is their way of doing it.
Yeah, and that makes sense. I do recall this being adjusted, as you said, that I do recall this being adjusted during COVID and after the SVB thing. Like I remember them talking about these specific things. I guess I don't functionally know how it works. I don't really care. It doesn't matter, I should say, rather. So essentially doing this could make it a more an easier environment for guys like us to get money. Is kind of what the intention is.
That's how I would interpret it. Yeah.
Right. So that could be a good thing, especially on the investor side of things. If you're able to go to banks, if you're a Fannie Freddie borrower, I don't know that this will affect, your local banks if they're doing commercial loans at all, because those seem to always be up to the discretion of the local bank. Yeah. But for your Fannie Freddie stuff.
Well, if you're a bank, you have a certain amount of deposits, which therefore gives you basically how much you can lend depending on how much deposits you have. They're just saying, hey, you have the same number of deposits, but you can just lend more as a percentage of the deposits.
Right. Now. Of that. Right.
So, I don't have a crystal ball of what this will do, but I think it does show that, hey, the Fed is trying to do something without touching the federal funds rate.
Yeah. Yeah.
Well, I bet it does nothing.
Time will tell.
Yeah.
Time will tell.
In 2026, June, 1 year from now, will it be better?
What's it?
The real estate market, the economy,
everything. Will the world be better a year from now?
Will we be better? You said it won't change. I'm just asking you, like, what do you think in a year from now? What will be different? This is going to be one change of many, probably.
Yeah, the one thing I can guarantee is if things are better, Trump will say it was his influence. If things are worse, it's because of Biden. That's what he will say. That's what the general consensus will be.
I'm trying to think of something funny to say, but I don't have anything funny because this is too serious of a topic now.
Nah, it's fucking clown's world out there right now, bro. That's just, but I would say something that is funny is that Instagram reel that you sent me this morning, and it was that clip from Uncle Rico Napoleon Dynamite throwing a fucking sandwich at Napoleon Dynamite, and it basically says like, he's the U.S. and this Iran. And he's like, what the fuck are you doing? I'm like, yeah, exactly.
He's like, check this out. It's like Israel, the U.S., Uncle Rico's the U.S., and they're sitting there on the thing. He's like, check this out. It's the U.S. obviously throwing the sandwich or the football at freaking Napoleon Dynamite. And Napoleon Dynamite's Iran. He's like, oh, what'd you do that?
Yeah, what are you doing?
That was funny.
Yeah, that is true. So it's interesting, though, because I do think there's going to be quite a bit of changes because obviously the economy is, it's like, moving it's theoretically okay. Like it's not broken. that we can see on the surface of everything, right? It's working, but people are like, God, I just don't feel more rich. Like nobody's feeling more rich right now. You know what I mean? And so that
Unless
is
you're a boomer
problematic.
that is at all-time highs in their 401k today.
Sure. Yeah, exactly. But like within the groups the crowds that we kind of like talk, right? People are doing fine.
Yeah, the other rich guys that we talk to in our extremely small bubble of 1% and 2%ers, correct?
Sure. But local real estate investors, right? I was just on the phone with a guy on the way in here, and it's like, how's it going? It's like, oh, it's good. But it's just like everything's hard, right? That's kind of the conversation you have. Like the people that are truly doing things, they're doing them, but the sentiment is that it's harder. Yeah. You could probably look back and be like, nah, dude, 2025 was similar to 4 and 3. I mean, maybe, I don't know. When you're in it though, the sentiment just feels like it's hard and grindy. Yeah. And so I bring that up just thinking like this is probably one of several changes. We will probably end up seeing some rate cuts at some point in the end of the year. And so is that going to drastically change the market for the better? And where it's going to bring people's sentiment up, and therefore it doesn't necessarily make this economy stronger. People just get more willy-nilly with the cash they have in their savings account and their credit cards. Mm-hmm. That's when people feel good, is when they're like racking up debt or spending money.
Yep. And the opposite side of that is when you start trending the other direction and they're like, oh, fuck, I got to figure some things out. And then they all like basically clamp down at the same time. That's when the problem comes.
That's when the problem happens. And then you're like, why the fuck won't my bank give me a loan? It's because they're clamping down because they're scared.
Yeah. So, I mean, the consumer debt issue is still going to exist, right? Which is a very, very big problem.
That's not go away anytime soon.
And that's not going anytime soon. And here is something that happened a couple of days ago, which I would say is such a bearish indicator for consumer debt. So we use Stripe to process our subscription payments for Scale, right? I got an email from them with great news. They're so excited about this. You can now use Klarna, right?
This is already bad.
Yeah. So Klarna, which is one of those like buy now, pay later systems, which has a huge amount of debt. That's been, defaulting with people.
This is the one that'd be like, hey, you want to finance your Chipotle burrito? You can do that.
Yeah, exactly.
Seriously.
Yeah. So you never heard of Klarna?
I've never heard of the name Klarna, but I've heard of like people like financing shit that they shouldn't.
Yeah. So Klarna's a big one. So Stripe now allows Klarna to be used for your monthly subscriptions. So I don't understand how this works. So basically you have something that you pay monthly that you can now use a buy now, pay later system.
That's weird.
So like you just dumb. So you have like your fucking July payment just for something like Scale. And then what happens when it comes up again next month? You just Klarna again?
Yeah.
And it's a recurring thing.
Yeah.
If it was like a one-time thing, it's a stretch, but I guess you can do that. But it now allows it to be used for subscriptions.
It's crazy.
And I'm like, what the fuck? Like, so there's just money coming from nowhere that they're never going to pay, because why would they?
There must be some model in that makes sense, because those are the type of people that are like that they're going to lose money, right?
Yeah.
Well, they've already lost like hundreds of millions in that.
Klarna has.
Yes, correct.
Okay. Yeah. That's what I mean. It's that there must be something that they think that they're getting out of this, because the people that are, it's like the cash your paycheck places where they charge you like 18% to cash your paycheck at 7 o'clock on a Friday.
It is the modern version of that, Dan. I think that's a great
example, payday loans and stuff like that. And it's like, but the people that do that never can get out of that cycle. So like, how are they going to pay you back?
If you ever go like mobile deposit, like let's call it $1,000 check. It's like, you can get this today if you pay $75 fee. I'm like, why the fuck would you do that? Or I can get it tomorrow for free. Yeah. But there's people out there that have to do that, I guess.
Well, so there's, like Stripe has offered us that forever. Like they will have a 10-day processing time for the money, but but if you want it today, we'll give it to you and it'll charge you like 12%.
Yeah. It's insane.
Yeah.
Insane.
Payday loans, baby.
Yeah.
One of the things, real quick, I know we're near the end of time, and I don't know if we touched on this in a previous podcast or not.
Of time.
God, I hope not.
Is the fact that these student loans are now having to be paid. Mm-hmm. But they weren't reflective. Like if they weren't being paid, they weren't reflected in credit scores. Mm-hmm. And now that they are coming due, I think a lot of credit scores are going to drop pretty significantly,
because they're revolving, or their debt will increase.
Yeah, their debt will increase. Their utilization will go up. All this kind of stuff. And so some of this was theorized that a lot of them probably know this, and so they're like trying to get some of these loans and stuff now where their credit looks good before it kind of catches back up. So that could have front run some of the numbers, economic numbers, saying, hey, we're actually okay, consumers doing all right, before their credit goes in the tank.
Yeah,
makes sense to me.
Yeah.
So what's going to happen though when they start paying these back?
Well, they won't be able to, and that's the problem. They'll be in default, and
So
you can't really get rid of student loan debt.
So these are I want to pull the thread on this because I would like to make sure I'm educated on this. So the student loans during COVID, you didn't have to pay them. Like you don't have, I've never had a student loan, so I don't know this, but like you have to take student loans, you don't pay on them till
you didn't accrue principal, you didn't accrue like interest.
Right. Until you graduate. But once you graduate college or you're out of the education system, you have to start paying them. But then during COVID, they're like, you're good. You don't have to pay them.
Correct.
And then did they keep like accruing interest that period of time and now people are even further back, or is it just like stop
if
a
you
period
had
of time?
Government backed loans, then they did not. But if you had like a private institution, then they would.
They did, but you didn't. They just couldn't. They could not get the payment from you if you chose to not pay.
Correct.
Which a lot of people for some reason
for that either.
Okay, yeah. So a lot of people probably for some reason, good or bad, decided not to pay them, and now they're having to pay them again.
Right, and this was like almost 4 years ago. So their lifestyle got used to not paying them.
Yeah.
They had lifestyle creep.
They were like, Biden said he's relieving student loans.
Correct. Yeah, they're like,
and
hey,
he never did.
I'm not gonna have to pay this ever. It's kind of their thought process.
Yeah.
And now the chicken's coming home to roost.
That's a whole other problem. How much fucking stuff, like how many decisions people make off of like bullshit that like politicians say, but they don't understand 100%. The process of it becoming a law. You know, so Biden says that and they go, oh, I guess I'm not going to worry about those anymore in my future financial planning. It's like, actually you do, you know, or like you see other shit, like with a lot of the Trump stuff that Trump's come in and promised. I've seen this happen repeatedly. We're like, oh, there's no longer going to be taxes on tips. Yeah. And it's like, he just tweeted that and people are like, sweet. Right. I no longer need to set aside
I'm not
tax
putting money.
Yeah.
No, they weren't anyways, let's be honest. But.
There's a whole process for that to become a law.
It's got to go through the Congress first.
And then you see
there's two houses in Congress. And
they're like, oh, a haircut for $1, but I want a 49% or $49 tip.
Yeah, exactly. No shit. Yeah, no, you're absolutely right though, Mike. People, but I think part of it is people want it to be true so bad that they kind of will ignore it. It's kind of like, I don't know if you've ever talked to somebody in like financial stress and they're like, I don't even want to look at my bank account. I'm like, but you should. Like, that's actually an important thing to do to see how much money you have, because it might actually go negative. Because you want it, and it's like human instinct to like avoid the problem. So when people want something enough, they kind of like, I think it's gonna work, so I'm just gonna not do this, and it's not my fault when I fail.
Yeah. No better indicator than the leads that are in pre-foreclosure.
Totally.
Because they stick their head in the sand. You're like, you'd think they'd be the most motivated, but no, they don't do anything until it's too late.
Yep.
Yeah. Well, I will say that if you're one of these people that, you know, has these student loans coming due and you're about to get wrecked, or you've been using Klarna, or you stopped putting your tip, you know, tax money aside, and you have a property you need to sell so that you can get bailed out, you should go to backyardhomebuyers.com. And we'd be happy to see if we take a look at your place.
Dylan does deals, answers his phone 24/7.
Exactly. So, all right, guys, we'll wrap up there. Thanks for listening, everybody. You guys have a great week, and we'll talk to you guys next time.